So they are arranging financing for the mine. They got a party that's financing it that brought in their own team to develop the Cerro Humil deal. So
right. Completely new management.
Right. It's to me, the interest in the company was the value between their assets and all the assets they have. Seems like it's some of the parts type of deal where it's worth more. Parts are worth more than what it's trading for. But I also kind of, like the, kind of management from an exploration perspective of generating new projects. Now it's kind of going to be a different company. It's going to basically be, it's building and operate a open pit heap leach gold mine in Mexico. So I think we have to look at it from that perspective and reevaluate what the implication of that is in terms of our interest level. So we'll go ahead and do that. I mean, the question is that, so Esperanza now is a different company. I think that's what we have to basically look at. I mean, it's basically still the same assets, but they're, that becomes different when, and not in a bad way. I mean, if they develop this project, I have to myself probably to see what, what I kind of think about. I have to more now look at, hey, how good is this mill in terms of mining and potential, in terms of what they can generate cash costs wise and all that kind of stuff. Because it still seems pretty darn cheap. I mean, if you take all those assets and now that it's funded, so that's out of the, that's no longer a risk, or at least it's somewhat, de-risked because it's on the way to, to securing all the capital. Now you have to seriously look at, okay, so the market's valuing that at $30 million, and is it comparable to a Timmins? Which even after all the, the market dropping down, I forget what Timmins is, it's still probably a couple $100 million. Let's see, but, but there's probably some upside there if you look at it as a, as a 100,000 ounce producer with a 10+ year mine life, and basically funded. So we'll have to revisit that one.